today we're here to talk about 3 things that every freight broker must know about their freight broker bond. So why don't you guide us through that a little bit, and then we'll see how far we can get.
Yeah, absolutely. And just kind of to set the stage, I mean, the 3 things we're going to go over that when Dennis and I were talking about this, I really wanted to provide some value to your students here and use our expertise to give you guys some inside information and a good clean explanation on some of these important topics. But we're going to go over first what the bond is, and equally as important, what it's not, because there's some common misperceptions as to what the bond does, who it protects. So I'm going to start with that. We're going to go over what a bond costs, the factors that are most heavily weighted in that, and tied to that, most importantly for your students, what you can do to save money, and then wrap things up by talking about one of the most critical elements of having a bond, and that's understanding how claims work and what your responsibility is in regards to handling claim activity and staying on top of that. But let's dive right in if you're ready.
Yeah, I'm all set. Tackle number 1. Let's go.
So the BMC 84 bond, most people that are applying for a bond have never heard of a surety bond before. They see it as a checklist item. As your students know, there's a number of checklist things you need to go through, whether it's simple things like getting your DOT and MC number. But one of them that can be the most daunting checklist item for some applicants is the $75,000 BMC 84 bond. So for any freight broker that wants to get active broker authority, they have to post the $75,000 bond. And what this bond does, and I'll get to what it's not here in a second, but ultimately it's your way to demonstrate to the FMCSA and shippers and motor carriers that you're working with that you have financial responsibility. And the bond essentially guarantees payment to shippers and motor carriers in the event that you violate some term of your contract. And most specifically, to simply put, it's making sure that you're going to pay your motor carriers on time, proper amounts per any contracts or agreements you go into. So that's what a bond is. It's important to understand what it's not, and what it's not is insurance. Most people know insurance. As soon as you drove a car, you had to get car insurance. There's a variety of different types of insurance that you're going to hold throughout your lifetime. Some are personal insurance items, and then some are for your business. When you get insurance, you pay a premium in exchange for protection for you and your business. So you pay the premium, you're protected. Something happens, a claim gets triggered. The bond company steps in, pays the claim, you pay a deductible. That's how that works in most cases. With a bond, there's a big difference. You're paying the premium, but the bond protects the shippers and motor carriers that you do business with in the event that you don't pay them. And so sometimes new freight brokers have a hard time understanding and like, well, why am I required to pay for this? And bonds are required in all lines of business throughout the U.S. at the federal, state, and local level. It's typically to provide protection and guarantee to consumers out there when you have a business that gets licensed. And in this case, the shippers and motor carriers most frequently are kind of filling that consumer role. So it's like insurance for shippers and motor carriers that you, the freight broker, have to pay for. So that's the easiest way to understand that. And the last thing with regards to defining what a bond is, at the basic level that freight brokers need to understand is if the bond company has to pay out a legitimate claim on your behalf, you are required to reimburse them. So we refer to it sometimes as surety credit. It's not, hey, I don't want to pay that motor carrier, so just put a claim against my bond. The bond company will pay for it. It doesn't work that way. Yes, if you don't pay someone and you're not complying with trying to get that issue resolved, and the bond company has to pay out a claim, I mean, that may very well happen, but they're then turning to you, the freight broker, to reimburse them. So you got to take these issues seriously. And the third topic we're going to get to is specifically for claims. I just thought mentioning that as, getting a basic understanding of the bond would be an important piece there. But
yeah, I think that's definitely a misconception that new brokers have, right? Joining the industry, they think it's an insurance policy. What it really is a guarantee to pay, right? That's really what it comes down to. That bond demonstrates your ability based on, filling out an application and vetting you that you will pay that claim in the event that it is a legitimate claim. Because the reality is, if you as a broker sign a contract or a rate confirmation with a carrier and that carrier fulfills their obligations and you, for whatever reason, legitimate or illegitimate, decide not to pay them, okay, they have the ability to file a claim against your bond. At that point, they're going to evaluate the validity of that claim, and they're going to make a judgment call as to whether they believe you owe the money to the carrier or not. Now, if they file it, if they don't have the right paperwork, if they can't prove they moved the load, if they're just trying to file some fictitious claim, you'll never have to pay for it. But in the event that they have a valid claim, you will have to come out of pocket for that, just as if you should, because if they did the service for you, then you owe the money, right? So it's really trying to prove, again, like Vic said, your capability to manage finances and have some sort of credit ability as a startup. Because the fact is that most people that are getting these bonds for the first time are startups. And, as a startup, there's risk for everybody, especially carriers. Carriers are carrying the most risk out of this whole deal, right? Even more than the brokers themselves, because setting up a broker business really isn't that expensive. So thank you for diving into that. That's important that you guys understand that. All right. So that's number one. What about number two?
So number two, one of the most common questions asked with someone that's doing this for the first time is, what does this cost? So I want to go over, to the best of my ability, an overview of what these are what these cost on average, what the current range is, and the factors that go into determining what your cost is going to be. And tied to that, things that you can do as a freight broker to try to reduce your costs, whether it be getting the bond for the first time or at renewal. So I'll dive right in. Oftentimes people want to get an estimate, early in the process, like, hey, what does it cost? There's a lot of search query in Google for what does a freight broker bond cost. It's a very difficult question to answer accurately because the range is quite large. Right now, 2021, the current prices with strong applicant, good credit, some experience, can be as low as the $900 range per year. And again, these are paid for on an annual basis typically. If you have damaged credit and other issues, the prices can be as high as $9,000 or more. So 900 to 9,000, that's a big range, especially if you're trying to properly plan for your business. And prices can fluctuate. The range can fluctuate based on a number of factors that are outside of your control as an individual freight broker, such as loss ratios in the industry and other economic factors. But right now, currently, that's a safe range, $900 to $9,000 per year. So with that said, what are the factors that are going to help determine this? The number one factor is the personal credit of the business owner. Personal credit is, people have mixed opinions on this, but personal credit is really, it's a demonstration of your ability to pay people back on time and to kind of control your funds. Bond companies feel over time that there's definitely a correlation between the credit worthiness of an applicant and the likelihood of claims being triggered. So with that said, if you've got really strong credit, then you're going to be eligible for the better rates. And if you've got bad credit, other blemishes on there, the opposite can happen. So that's number one, without a question, personal credit. That's what the underwriters are looking at first. Secondly, while we don't ask for this, and most agencies and underwriters don't ask for this, strong personal or business financial statements can help. And I know, just like you mentioned, Dennis, most people in your course, these are new businesses. Most people applying for a freight broker bond, you're not going to have business financials if you're a brand new business in most cases. But with that said, it's possible to have dinged up credit due to medical issues or whatever it may be, but actually have strong personal financials, whether it be liquid cash in the bank or other liquid investments. If your credit, if your credit's going through a few issues and you're applying for a bond, but you've got a strong personal financial statement, proactively provide that to the underwriter, and that can be something that impacts your price. And the third thing I wanted to cover with regards to price is industry experience. This one's not nearly weighted as heavily as credit in those first two items, but if you're in between tiers with an underwriter, you've got kind of credit that's at that borderline. Having experience in the industry, relevant experience, particularly if you've had a freight brokerage before or worked closely with a freight broker and you have years of experience, if you can demonstrate that, that's something that can be favorable as well. So those are the biggest factors that underwriters are going to review when they're determining what price to offer to an individual applicant. I will say, kind of like I started this section off with, a lot of people want to know an estimate of what this is going to cost. Personally, being an entrepreneur myself, having to go through startup costs to get up and running. If it's me and I'm starting a business and I know there's a range on one of my checklist items of $900 to $9,000, you want to get an actual quote. There's cost calculators out there, but they can be misleading, and they're relying on what you're saying your credit is, and when in reality, the bond underwriters are doing insurance underwriting algorithms, which may be a little different from what you're seeing online. And I'd hate to see someone go out there, think they're going to pay $1,000 a year, and then the quote comes back at 5,000 or more. Your best bet, if you're serious about starting this business, is to go ahead and get a free quote. You could do it through Lance Surety. Dennis and I were talking earlier about the link, which is freightbrokerbootcamp.com/bond/BOND. And we've got a unique one-page application, very simple and straightforward. Takes about 30 to 60 seconds to complete. And we can get you a free no obligation quote. And we'll let you know not an estimate, but exactly what this is going to cost. And our quotes are valid for anywhere from 30 to 60 days. And on occasions, we can get extensions on those as well if you need more time to get started. But I wanted to reiterate how important it is to actually find out what these costs are going to be, because you get to the 11th hour and you check off every item on there, you invest time and money, and then your last item is that bond, and then you go apply and find out that you can't afford it. That can cause some headache and some heartache for individuals, and we've seen that happen. So be proactive and don't rely on those online ballpark estimates. Get yourself a free quote.
Yeah, what I see from students in most cases, because they'll give me a lot of feedback on what their bond cost was after getting started up, and I see the range. Usually, the range is usually somewhere between 1,000, 1,200, up to around 3,000. That's really consistent. Now there are outliers where it's $5,000 or $6,000 or $8,000, but the majority of them fall somewhere in that 1,000 to 2,000 to maybe 2,500 range. And that's where the bulk of them come in. But again, if you're looking to get this started, this is going to be by far your largest cost item for checking that box and getting your authority. Of course, you're going to have ancillary costs for load boards and hiring people and whatever else you do with sales and marketing costs or whatever you're doing there. But you definitely want to shop around. And that's part of the reason why I had Vic on, because I know that, from feedback from past students, from the vetting that I've done online, making sure that, that he's been doing this for a long time. He's been doing it over a decade. I wanted to put this together as a way to try to help you guys, just make sure that you're getting the best coverage and the best rates. And so that's why I had Vic on today. And that's why I'm glad you're here, because if you go to freightbrokerbootcamp.com/bond, here's what's going to happen. You're going to see an application, a simple application. You fill it out. I'm going to be totally transparent with you guys. In the event that, you guys choose Lance Surety Bond for your bonding, we have a referral relationship where they'll pay like an affiliate fee for that. But here's my promise to you. I want to be totally transparent with you guys about that. But here's my promise to you. In the event that we're compensated at all for anything that you guys do with Lance Surety Bond, number one, it's not going to cost you any more. And number two, I'm going to reinvest all that money back into the program itself. So we're going to reinvest that back into enhancing the training, enhancing the software, enhancing the systems, enhancing everything. It's not going to go in my pocket. It's going to go right back into the Freight Broker Bootcamp community. So that's my promise to you. But if you guys want to check that out, check out freightbrokerbootcamp.com/bond. Okay. That's all you got to do. All right. So number 3, last but not least.
Yeah, absolutely. We started touching on this earlier, and that's understanding bond claims. I want to make sure that all of your students understand what this is, what these claims are, how impactful they can be for their business, and what you could do to try to mitigate that risk. And ultimately, when it comes to bond claims, as we mentioned, the most common example is going to be a claim's triggered when you don't pay a motor carrier on time. So what can you do as a freight broker to try to mitigate risk? Number one, understand payment terms of all contracts you go into. I mean, that's a first that goes without saying, but as you grow your business and you go under more and more contracts, it's possible that, we're all humans, you can get mixed up, and but you got to make sure you're paying close attention to that. Make sure you have a solid broker carrier agreement, which clearly outlines the payment terms, and understand the wording of each contract, specifically when it comes to the payment terms, like, is payment due upon receipt of the invoice or proof of delivery? But that's responsibility of the freight broker when you go into those contracts to make sure when you're supposed to pay these guys. The second thing I'd recommend, and this is going to come across as common sense, but it's an important thing to consider. Whether you're a freight broker in any line of business, but particularly for freight brokers where claim frequency is quite high, work to establish good working relationships with your motor carriers. And what I mean by that is in the digital age, we see it happen. I'm guilty of this myself. You can be working with someone for 5+ years and never actually pick up the phone and talk to them. And I'm not saying you have to go take every motor carrier out to dinner and establish a close personal relationship, but work on communication. When you do that, hopefully that your good faith comes to you in the event that you get caught up in something personal or you're buried in work and you're a day late on payment. You'd hope to create an environment where maybe somebody might pick the phone up the day after something's due and say, hey, where's that payment? Certainly don't want to have that be a repeat occurrence where they're having to call you all the time, because no matter how friendly you are, eventually they'll get fed up. But you hope to get the benefit of the doubt from the motor carriers you're working with, and establishing a good working relationship with them where they know you as a person and not just a bunch of letters on an email. That could definitely make a difference as well.
Yeah, I agree. Let's talk about that for a second, because here's the thing that you have to understand as a new broker or an agent is that you really have three customers as a broker. Carriers are actually in a way customers to you, right? Because without those carriers, you're not going to move any freight. So you should treat carriers just as well, if not better, as you treat your shippers, which is the second group of customers, right? So you've got shippers, you've got carriers, and then the third one I always consider is employees, people that work for you. These are people that you have responsibilities to, right? So you're in a partnership, you're in a marriage, you're in a relationship. So pick up the phone, exactly what Vic said. Develop a relationship. You should be treating your carriers just as good, if not better, than your shippers. So, I know tons of brokers who like to operate just through email or just through voicemail or just through text or just through digital. But the fact is, the power of picking up the phone and actually developing a relationship, not only will it potentially prevent a lot of these claims, but it'll enhance your relationship and allow you to do more with that carrier, right? Maybe you're moving one lane or two lanes, but because you haven't taken the time to actually develop a relationship, there's a whole set of tools and resources and opportunities that are sitting there with that carrier that you don't even know about because you're keeping everything at arm's length. So develop strong relationships with those carriers. Develop strong relationships with all your vendors. I don't care if they're software providers. I don't care if they're surety bond providers. I don't care if they're motor carriers. I don't care who they are. Develop strong relationships with them. And when issues do come up, that phone call is going to save a lot of hassle and a lot of grief. Okay. So no, I appreciate you diving into that. I think that's really important. So Vic, is there anything else you want to share before we jump into Q&A?
When it comes to one more point on claims, and thanks for elaborating on that. That's it's a really important piece. And again, it does seem like common sense talking about the establishing good relationships, but it's kind of the sign of the times. A lot of people get comfortable with email. So
sometimes common sense is not real common.
Yeah. Well, I was the last comment on claims. Sometimes if you do things the right way and you establish good relationships, you pay people on time, you're hopefully not going to have claim activity. But even some of the best freight brokers that we represent, they're not immune to claim activity. So sometimes it's not just a matter of if, but when a claim might be filed against your bond. And sometimes these aren't legitimate, as you hinted at earlier. There's some things that are excluded from the bond, like interstate commerce is covered by the bond, intrastate is not. But if you do have the unfortunate event of having a claim placed against your bond, it really helps to have an advocate, especially if you haven't done this before and you have no experience holding a bond or navigating through the claims process. Most bond agencies out there have zero involvement on the claims. They take your money and they take your premium. They get your bond filed through the carrier, and then next time you hear from them will be when your renewal is up, when they want more money. We at Lance Surety actually have a full-time claims manager. We've had him for the past 5 years. We identified that there was a way we could add value to our customers based on the frequency of claims to try to help them navigate through the process. And he's not a miracle worker. He's not going to pay your claim for you. He doesn't have any magic phrases that just make them disappear. But what he does is facilitates communication and can help serve as your advocate to the bond company. And that goes a long way, because depending on where you get bonded, the motor carrier that's putting a claim against your bond, they put a claim against your bond. They're not necessarily picking up the phone and saying, "Hey, by the way, I just put a claim against your bond." Sometimes they might, but oftentimes they don't. If you're waiting on like $1 billion insurance company's claims department to, reach out to you proactively and lay everything out in a calm, legible format for ahead of time, so you can squash it before it becomes a problem, that's a risk. So our claims manager is very proactive, connected with the claims managers at the carriers to really push anytime there's a claim for any one of our clients' bonds to get that information. Oftentimes, the freight broker had no idea that there was a claim, and many times it was the load was already paid for or whatnot, and they provide documentation, and it just gets either rejected or the whole issue gets resolved. But you want to be careful when you're applying. Yes, you want the lowest price out there, but you also want to be, aware of what am I actually buying and what service is that agency providing, aside from just getting my bond filed with the FMCSA for me. Because again, if claim happens, it's nice to have an advocate there who knows what they're doing to help support you. So to summarize claims, you never want to have a surety pay out a claim on your behalf. If you do, your bond's very likely going to get canceled, and you may have difficulty getting bonded again. And two, tied to that, do everything you can as a freight broker to try to avoid claim activity, doing the things we mentioned, and just trying to stay on top of your business, pay people on time, and do things the right way. So that's I know I was long-winded, but
no, that's fine. Perfect.
Those are the
no,
key
I love
points
it.
that I wanted to make sure we got through to your students.
All right. So here, if you guys are curious of what your bond is going to cost and you want to get an actual quote from someone who represents multiple carriers that do these broker bonds, go to freightbrokerbootcamp.com/bond. You're going to get a link to an application. It'll take you probably 60 seconds to fill it out. And then Lance and his team are going to get in touch with you and discuss exactly what that looks like for you in your business based on your exact profile, where you stand today. So you don't have to guess on what that cost is going to be. Again, if you're already a freight broker and you're curious if you are paying too much, feel free to reach out to Lance too. Also through that application, he'll do the exact same thing for you. And for those of you that are curious, if you're sitting here and maybe you're a first timer, or you've been listening to some of these lives or watching some of these videos, but you have yet to really understand what freight brokering is all about, and this stuff's flying over your head, and you want to become a freight broker, freight agent, check out freightbrokerbootcamp.com. We've trained over 10,000 students, been in business over a decade. We offer a 60-day, 100% money back guarantee. So you can definitely check that out absolutely risk-free. So